Diane King Hall is with us, host of Morning Movers, to take a look at specific names on the move. First up, Apple. Your iPhone looks like it could be more expensive, not because of tariffs?
No, not because of tariffs, although we are seeing shares of Apple rally along with the broader market momentum that we're seeing, especially when we look at, members, the Mag 7 and the news of the U.S. and China trade deal with this 90-day pause between these draconian tariffs that we'd seen both sides import. So you're seeing Apple rally along with the broader market. At the same time, you've also got this Wall Street Journal report suggesting that Apple considering price increases for this fall, and that the idea is that it actually wouldn't be attributed to price increases because of tariffs. And look, to be fair, we now have a 90-day pause, and most Apple devices are assembled in China, although Apple's been working to pivot some of their manufacturing to India. Now, they're reportedly weighing these price increases to couple them with new features and design changes. And keep in mind, smartphones and other electronics had been exempted from reciprocal tariffs on Chinese goods. New iPhones set to be released this fall, again, would include some format changes, some design changes, including this, I guess there would be a thinner, an ultra-thin design for the new devices.
I mean, my current one, which is the 12 Pro Max, is like a brick.
Yeah.
It is so heavy. I love the bigger style. If I would go back to the teeny weeny one, like to put in my purse for dinner. I like that. But I mean, we'll look forward to what the new features will be, what the changes will be, especially if we're going to see some price hikes along with it.
Agreed, and especially considering that some of the pressure that we'd seen on Apple this year ahead of the tariff news had to do with the lack of momentum that you saw around. We were potentially supposed to see a super cycle that started late last year. That didn't happen, and a lot of that was tied to acceleration of AI features with regard to the Apple devices. So will the new devices have more of that AI feature involved in it? And, look, to your point, I have a heavy iPhone as well. I think somewhere around there, 12 or 13. So I'd be interested to see what a new thinner design would be as well.
Yeah. And if Tim Cook's listening, I always secretly wished that I could have two phones with the same line. So one for nighttime and one for daytime. Because the daytime one would be bigger and more functional, and I'm working on it. The nighttime one would go in my purse and would be teeny weeny. So, but you can't do that.
Well, some would argue that the iPhone is always listening, so maybe the AI is listening right now.
Or the watch. I mean, I understand the watch can sort of suffice as the phone for evening, but I don't care for that watch personally. Let's talk about the Coinbase moves.
Okay, so Coinbase on the receiving end of an upgrade. It's being upgraded to neutral from a sell. This is over at Compass Point. They cite the potential for what they see as an alt season in the upcoming summer. So they see, when we're talking about alts here in terms of Coinbase, that's those alternative cryptocurrencies beyond Bitcoin. So say Ethereum, or as they call it, ETH, Litecoin, XRP, Doge, etc. So the idea is, from their view for Compass, that the fundamentals of Coinbase, and people have pointed out this, have diverged from how Bitcoin performs, because you'd already seen stronger performance in Bitcoin compared to the altcoins year to date, and Coinbase hadn't been as correlated, even though they were closely tied to Bitcoin because of their Bitcoin exposure that Coinbase has. But they've decoupled from that, or moved away from that. But shares of Coinbase are moving higher, not just with this analyst move, the overall broad bullish momentum that we are seeing in the market, sending shares of Coinbase higher right now, up at the moment more than the 6%. Oh, actually 5.5% right now. At my last check, it was up 6%, but so up 5.5%. So maybe it is catching up in terms of momentum to Bitcoin's price action this year. So again, the view of this now, Compass now neutral on it. They've got a $195 price target on Coinbase, which is actually lower than where it is today. Yeah,
I mean, I see all kinds of targets, right? I saw 270 from Needham. Some of these you mentioned already. JP Morgan 217. Oppenheimer had 269 on May 9th. Also they're expecting just more volume, maybe more interest from the retail traders on this. And there was some stats about the inflows for gold versus Bitcoin, and that there were more inflows for gold than Bitcoin, but that Bitcoin had done better than gold. I don't know what the period of time was,
okay.
but I do know that Bitcoin has shined, when you see it at 104,000 today.
It has. It certainly has. And then some have considered it, kind of the virtual version of gold and suggested it's an alternative to that. But look, gold has, you can't discount the move that gold has had year to date. So that was probably obviously a different comparison than year to date, but we're seeing Bitcoin shoot higher above, as you mentioned, 104,000. And great points you made about different analysts. We had different analysts re-rating after Coinbase's earnings because they had mixed results. You'll recall they had this slight miss on revenue, but they did have adjusted EPS that beat expectations on their latest quarter.
Yeah, and most of the folks I'm speaking to still seem to lean towards Bitcoin over Ethereum.
Yeah.
Ethereum hasn't done as well as Bitcoin, and there's been a lot of optimism around it, but it just, I don't have guests coming on and saying, you know what, now I really like Ethereum more than, I'm not hearing it from the guests who are more, well versed on this. Last but not least, we're seeing retailers moving higher on the heels of the China deal. We'll have retail sales and Target in focus.
It is. Target right now shaking off news of an analyst downgrade to it. Target moving higher along with other retailers off the back of this news of the deal between the U.S. and China, putting forth this 90-day pause on the extensive tariffs between the two countries. But here's what's happening on the sell side. Bernstein has downgraded Target to underperform from market perform. They've cut their price target to $82 a share, which they had it at 97 previously. So before today's move higher, that was it implies about 15% downside. They're expecting disappointing results when they report coming up. They're expecting weak consumer sentiment to have played out, unfavorable weather, and they were also impacted by a DEI-related strike. There was a boycott of the stores, so they see a lot of red flags when it comes to Target. And look, that matches up with some of the other recent analyst commentary that we've heard. Target has some problems that are idiosyncratic to Target.
Yeah, just 3 months down 22%. So still a struggle there.
It is.
Okay, good to see you,
Good
Diane
to be with
King
you.
Hall from Morning Movers. You catch her each morning here on Schwab Network.